Morning, Steve Free in Chicago with the morning grain comments. Well, it's been an interesting week to say the least. First of all, there was talk that the U.S. and EU dropping tariffs would help the soybean market. The problem is that Europe's already buying all their beans from the United States, so we'll have to kind of see if there's an increase in demand. Right now, canola, sunflower is a big part of Europe's oilseed usage, and so we'll see if soybeans can kind of cut into that if there's some kind of price advantage to soybeans. Also, this week we continue to hear talk that, first of all, China's doing everything they can to lower the amount of soybean meal in their hog rations. We also note that their hog numbers are down. So then we move over to their imports of beans, and the USDA just dropped their import numbers from 103 million tons to 95, and some people think it could be lower. So then where do they get that tonnage from? There's people that think that Brazil could actually ship more than 70 million tons to China, which could be as high as 80 million tons. That leaves only 10 or 12 million tons that they need to pick up. They can pull beans out of their reserve. They can buy beans from Argentina, and so that doesn't really leave a lot for the U.S. And so there is a thought process that China may not buy any U.S. beans in 2018 and 19, and the other part of world buyers are not going to be able to make that up. So until this is resolved, many people think soybean prices need to trend lower. And so at a meeting with farmers in South Dakota yesterday, most of the analysts were telling farmers to sell their beans. On the corn side, the corn market could have a bounce after harvest given the strong demand. This includes even a record corn crop yield. So the same analysts were suggesting farmers, if they could, try to store as much as they corn to try to take advantage of this rally after harvest. This week we saw some profit taking in wheat by Europe from an overbought situation that's trickled into our market too. We're going to be into the spring wheat harvest, but Crop Scouts this week on the annual tour found a little bit lower yield than what the market is expected and a little bit lower yield than average, so it may not actually offer as much resistance. So the wheat market still has an uptrend in it, but at 570 on the nearby Chicago and Kansas City futures, there's a lot of resistance, even though world crop production is coming down. We also note that there are some professional traders that still like to leverage maybe every other day, either buying beans or selling corn and wheat against it, or one day buying corn and wheat and selling beans against it. It really has nothing to do with the fundamentals. It's just taking advantage of market swings. They usually tend to get in on the opening and then get out on the close. So that kind of changes some of the fundamentals that causes technicals to be kind of swayed one way or the other without really any fundamental backing. Today we're going to get some GDP data from the U.S. Many people are expecting a 4% number, which would be positive to the dollar. Could be positive to stocks depending upon which areas of the economy is growing. And we'll just see if that kind of filters in. We also note that there was an IMF study out that because of the tariff wars, you could actually see China's economy slow and begin a steep drop in their economic growth through 2020. So that's something that we have to also watch pretty closely about and how that affects their demand for food and feed. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.